Sticking with earnings now, take a look, another look at shares of Coinbase, lower in overtime after the company reported a miss on the top and bottom lines and a greater than 50% year-over-year drop in trading volume during the second quarter. Now, joining us for instant reaction to the quarter is Mizuho senior analyst Dan Dolev. Dan, what are your first impressions here? I mean, it didn't seem like expectations were particularly high going in, but there was that rally in the stock connected to the recent BlackRock partnership agreement. So where does that leave you after these results?
Right, and the rally happened a day before the news, which was also peculiar, but it started before the news. But I think my quick reaction on this one is the most important metric to look at is the take rate on the retail side. And some people might actually get excited, and I think that's why the stock traded up slightly. You know, in the beginning, they might get excited about the 3 basis point uptick in that from 130 to 131 to 134 basis points. This is actually up, I think, for the wrong reasons. They're actually losing share to FTX and I think also Crypto.com on the prosumer side. So like the real big traders. And because of that, there's mix shift towards the long end of the retail trades. And that's what's ticking up the retail take rate. So I think it's actually getting excited over it is actually getting excited about a bad thing, not a good thing.
Yeah, it would seem like, I guess, a lower quality customer base is a bigger part of the mix, if that's the case, Dan. I mean, where does that leave you big picture with regard to this company? If, in fact, they're losing share, it's kind of unclear exactly what this industry is going to look like in terms of how many of these large trading platforms that'll be sustained longer term. So with a $20 billion market cap or so, or less than that now with Coinbase, how would you think about it from an investment perspective?
I think from an investment perspective, look, we have a $42 price target or in that area. I think from an investment perspective, it's a no-go because what we haven't seen yet, Mike, is the retail trading fees come down. And with all the competition, right, what we talked about, FTX, Sam Bankman-Fried is killing them on the prosumer side. Crypto.com is gaining share. We've seen all of that stuff. Eventually, the next leg to the story is price contraction on that retail take rate, kind of offering freebies to get customers in the door. Remember, they're guiding down the year from 5 to 15 MTUs to 7 to 9. So at the midpoints, they're guiding it down by 2 million monthly users. So I think over time, you're going to see this is going to go the same route as like the Schwabs of the world and the TD to free trading. They're still charging way too much money on the consumers. And that's going to be the next down leg in the stock, in my view.
Is there any answer for that? I mean, if you're strategically speaking, aside from potentially consolidation, I mean, is there any way out of that trap, I guess, of being pulled down toward lower and lower transaction revenue?
I wish, but I mean, the only other way is maybe some of those subscription and services. They were actually surprisingly more resilient than I would have thought. They ticked down, but just a little less. They were just a little down versus 1Q. So maybe if that one becomes a bigger price, bigger part of the mix fast enough to more than offset the decline in trading fees, that might be sort of the silver lining here. But I think it's very, very hard to outrun. This is why they keep hiring and why they're still spending more than $4 billion. They understand this and they know they have to outrun the degradation in fees. And that's kind of the job that they have right now.
Yeah. All right. Well, $42 price target. That implies getting cut in half from these levels right here. Dan, we'll see how it goes. Thanks a lot for the time.
Thanks, Mike.